Andrew, welcome to the show today.
Thanks. Thanks so much for having me. It's a pleasure to be here.
Yeah, so you're a busy guy, you're a tech guy, you've got a pretty busy job, and yet you were able to build up an impressive portfolio on the side. And one of the objections we always hear, or very frequently, is, my gosh, am I going to be able to do this on the side? Do I have enough time to actually do this, or do I need to be Superman or Superwoman, right? And obviously, that's what I want to talk to you about this show, because I hear this a lot, and I love talking to people, busy people like you, who somehow figure out how to do this super busy job, responsibilities, and then you've got a family, and you got to run some chores every once in a while, and then all of a sudden on the side you build up this portfolio. So I want to know, kind of from you, why did you first get interested in real estate to begin with? Like what was going and what did you start doing? Because very few people, well, more and more now, but typically now people don't wake up and go, oh, they read, the Purple Book and they go, oh, I know, I got to buy myself a 100+ unit apartment building. That's exactly what Schutsky talks about. No, they go, oh no, I need to flip a house, or I need to buy a house, or I need a house hack or something. Yeah. Nothing necessarily wrong with that, but I'm curious to see, first of all, why did you start looking at real estate? And then what was your initial strategy?
Yeah, so my story goes way back, I got into the multifamily space way late. I'll admit to that, but my story goes way back. From a young age, I've always been obsessed with anything real estate. I was that kid that loved to play Monopoly. It was my favorite game. And I always thought for a number of years, and it's embarrassing to admit this, that I didn't discover the real purpose behind this until later. But I always thought it was just, brick by brick, single family by single family, maybe a duplex or a townhouse. And I don't think I'm abnormal in that either. But it took me a number of years to find, where the accelerated path was in the multifamily space. But it started really back, out of college, 2007. I started my first single family, became what was called now called a house hack. Nobody was calling it back then, but I was traveling. I was traveling 50 weeks a year, 5 days a week. So I was never home. And I'm like, well, this is a waste to have a space in my house go unutilized. So I thought that was going to be, hey, I'm going to keep repeating this for a number of years. And then, 2008, 2009 happened. I pulled back when I should have been buying, right? Another mistake learned. And then I started down the short-term rental route. So I was like, hey, I love going down the shore and being near the ocean, vacation properties. This is cool. After a few of those, you realize it's a serious capital outlay. And there's really not, aside from appreciation, not a massive amount of cash flow. It's a fun business to operate. You deal with some really friendly people, but the scale would take, even at, two decent incomes, decades, not a number of years to get where you need to be.
Now, were you looking for just additional income on the side, or were you looking for a way out, or what was your motivation there?
Yeah, in the beginning, it wasn't really a way out. It was just more of like, hey, how do I make best use of the money I'm making at my job and not, piss it all away on the fun toys? So let me invest in property, which, is going to appreciate over time. So it wasn't a cash flow. It really wasn't until I learned about multifamily that I realized this could be an active replacement for income. So that the short-term rental business was great from an appreciation play. But it never got me thinking about, oh, wow, this could be my job someday. I would need, 30, 40, 50 properties and, $250,000 a piece to put down. It takes a while for most people to do that.
So it's a good point. So you have this excess money and you're trying to figure out what to do with it. Were you also investing in the stock market at the time, or?
Oh yeah. Yeah.
So what was kind of like in the first year or so when you were getting into real estate, kind of what was your allocation there? What were you investing in, or what were you thinking of investing in?
So at the beginning, it was probably 80% stocks, 20% real estate. And it was kind of like whatever's making from stocks or, flipping those for every year or so, I'd put back into real estate. And now I've kind of flipped. I use kind of stocks or maybe bonds as my short-term holding period. And most of it goes back into real estate for the main reason that I like having control over what happens with my money and the asset, right?
Yeah, that's exactly right. Talk a little about your job. And we talked about you have a demanding job. What is your day job? What do you do?
So I spent 20 years in the technology side of the world. I'm a CIO for a medical technology company, so oversee all aspects of actually where we invest our money in software. So a lot of parallels to the investing space, and quite frankly, meet a lot of investors through that space too. So yeah, I run an IT organization for about a $750 million company.
Yeah, that's pretty nice. So that keeps you pretty busy. And so you started buying like these little houses here and the short-term rentals here. Talk a little bit about when you made a shift into a multifamily. What is that? What have you done since then? Like get us up to speed a little bit.
Yeah, so it was late 2020. I came across a post in Bigger Pockets, and again, I feel like I'm a decade too late, but better late than never, right? where I saw a story of a syndicator who happens to be local to where I am. I'm like, hey, I know that area. I kind of know this guy and his name. I read, I think it was like 62 pages of his blog. And I'm like, oh my God, how did I miss this? As obsessed as I am with real estate, how is it possible I've ignored this for that long, or I just never came across it? So that got me, that kind of created a spark. It led to reading of maybe 25, 30 books, signed up for a mastermind, went to a bunch of local meetup groups, and it went from a passion to an obsession. And that led to a few short months later, my first partnership as a GP with, a smaller role, but started to scale from there.
That's pretty cool. So what have you done? So give us so you've done some passive, some actives. What have you done?
Yeah. So my first deal was investing as an LP. I kind of wanted, before I wanted to go, raise money and find my own deals, I wanted to know what it was like on the LP side of things. Right. So found a property that made sense, found an operator, actually through bigger pockets, invested in actually a fairly large complex. It was over a 900 unit building at that point. So I got more than I expected to learn from that. And I actually reached out to the operator, said, hey, would you be willing to show me behind the scenes a bit? We did that. It wasn't really the same experience as running your own, right? But I used that as part, building my resume and credibility. And now I had an idea what it was like on the LP side of things. I'm like, okay, I'm ready to find my own deal. So started going to conferences and really found my way into my first deal by offering my services. Hey, I've got a great professional background. I can help put the deals together. I know the financial side of things. I can help raise money. And even the tech side, right? I can help build the investor platform, the portal, all that cool stuff. So that was kind of how I worked my way into my first. A little bit of luck and a lot of perseverance, I'd say, is how I chalk that up.
So how did you find that first deal then? Did you find the first deal, or did you network yourself to that first deal?
Yeah, it was a network. So it was somebody else had a deal, just got it under contract. And quite frankly, they had a number of deals they were trying to juggle and balance and close. They just needed a lot of heavy lifting to be done. So right place, right time, maybe. So it was through networking.
So did the deal kind of dictate your partnership, or were you looking for the partners in advance? You're like, hey, when we find something, let's do it. What was kind of the cadence behind that?
Yeah. So I was out to do a number of matchmaking sessions, right? I knew kind of where my strengths were. I hadn't really honed it in. And quite frankly, it's still work in progress for me, honing in that one thing. So I just started reaching out to people at conferences and bigger pockets, meetup groups and local meetup groups, and just saying, hey, here's what I'm about. Here's my background. I'm transparent about everything. Here's the criteria of the kind of property I'm looking for. Here's the role I want to play. And I probably talked to 30 or 40 individuals before it clicked the first time. So
and then you kind of went through this process of identification. You're like, hey, here's what I want. Here's what I don't want. And then how did you finally arrive at the one?
Yeah. So maybe a bit of serendipity as well. But like I said, it was kind of a matchmaking of, I knew what I wanted to do. I knew, I'd like to start building my brand, and I was looking for something in that, not too big, not too small realm. Like I knew I wasn't going to start out with like a 10 or 20 unit. I know how much time I have available a week. I know how much I can spread myself throughout the year. So I was shooting for, a 50 to 125 unit deal size to get my feet wet, talking to investors, building the brand and things like that. So that's kind of what I was advertising. I was very clear about that up front. And with that, you're selecting out more than you're selecting in, right? And then I think you get pickier over time who you want to work with and things like that based on values and all that kind of thing.
But you did a lot of networking is what it sounds like to me. And were you specifically looking for what we call a deal finder, someone who's finding a deal?
Yes, absolutely.
Yeah. Okay. So there's different career paths, and people somehow naturally tend to one or the other. There's a deal finder. There's more the capital raiser, and those are the perfect partnerships, because a deal finder has the opposite problem you have, which is I need capital. And maybe I need a co-sponsor or something, some adult supervision maybe.
Yeah.
And then you have the exact opposite problem. You're like, I don't have a deal. And you know what? I don't really want to go find a deal. Like the activity just doesn't appeal to me at all. So you did a lot of networking. And is that the only deal you've done in that way, or have you partnered in other ways after that?
No, right after that, I guess just you get a lot of attention as you start to get your name out there and attracted. Hey, I could use your help here. And it was probably a month later that I got into a 43 unit, and that closed quickly. And then now since then I've been looking with partners for our own deals, right? So we've been vetting and screening. So my role's kind of expanded. And now I'm at a point where I kind of want to pick one thing, right? Because it's really hard. As you guys know, I'm speaking to the experts here. It's really hard, with say my 15 to 20 hour week budget. to be really good at building a brand, keeping the podcast going, maintaining the website, getting posts on social media, and corresponding with brokers on, let's say, 5 to 7 deals a week and underwriting them and giving them the attention they deserve. It's really hard to do both. So I'm really now I'm at a point where I got to pick one thing, and that's where I'm at.
So, so this is one point I wanted to bring up, is that sometimes when you're trying to find your partners, it's good to do one deal and see how that goes in that relationship. Yeah. That's actually how I met Michael. Was I came with what they needed, and I was like, listen, I have a deal. You guys want to do it? Let's see how it goes. And they said yes. And
it went very poorly.
It went horribly.
Nice.
The deal, we actually didn't close it. We actually lost a bunch of money. It just flopped.
Nice.
Just being candid. But we worked on that together for like a year. And they saw my determination. I didn't get paid for a whole year, by the way. I was like, and I had money in the deal with these guys, and we're trying to pursue this thing, close it. By the way, I'm also like 6 years into my career, and I've done this a bunch of times before. And I'm still, and it just wasn't the right situation. Yeah. It's crazy, right? And so, but the really important part is that we didn't want to kill each other at the end of it. When everything fell apart, we had made decisions together consistently. And that was the big difference, is that myself, Michael, and Drew, whenever there was a big decision to be made, we jumped on a call, we decided on one way forward, and we moved forward on it in the same way. And then when things went sideways, we were like, well, we all did it together. And so,
and that's the key. I mean, just you do one partner, like you said, you do one deal with a partner, and it doesn't necessarily mean that you have to do a second and third and a fourth deal with that person, right? I mean, you could, hey, this guy's a knucklehead, and that was the last deal you've done. And good news, the divorce is already baked in, because in 5 years when you sell it, so it's a great way to actually get into the joint venturing game.
You're absolutely correct, and I couldn't agree more strongly with that statement. I think it's for me, the biggest lesson learned is when you're looking for a partnership, it's not just, hey, what are your objectives? It's like, what are your values behind that, right? I really value communication and quality, connecting with investors, making sure every T is crossed and I is dotted. Whereas I wanted to do 2,000 doors this year, regardless of how to get there. That's not me. I'm all about, helping as many people and raising money and getting my name out there for sure, but not at the expense of quality. So I think you learn that pretty quickly, and you get more and more picky as you start to meet more people and see what your options are. So
you mentioned just a minute ago that you have a 15 to 20 hour time commitment. Did I hear you right about that? So that's a pretty high time commitment. And, I'm going to assume that you work at least 40 hours in your day job, probably more like 50 or 48, right?
Yeah, that's about average. Yeah, correct.
And do you have a family as well?
I do. 2 kids, young kids too.
And at least, and probably at most one wife. And so you have some, you have some demands, on your time. And when you say 15 or 20 minutes in addition to your 40, 50 hours of job and then your family, something's got to give, right? You're looking at it like, oh my gosh, how's the man doing it? So how are you doing it?
Yeah. So I guess one thing I'm fortunate about is I don't require a lot of sleep. So I use a concept. I'm rigorous with and very disciplined with my time blocking, and everybody else in my house sleeps in. So I really take advantage of that 5 to 7 a.m. window, Monday to Friday, and then Saturday and Sunday mornings between, I'd say 7 to 9 a.m.
When do you go to bed?
10. Pretty early, like 10 p.m. probably.
Okay, so you're still getting your 8 hours of sleep. You're just shifting it earlier. So
correct.
That means you're probably you're watching less TV at night.
Yeah.
And then you're getting up before and you're not sleeping in.
Yeah, and I guess I'm lucky that I don't need an alarm clock. I wake up and I'm ready to go. A lot of people aren't morning people, so maybe they do the 9 to 11 p.m. window, right? And that's a lot of my friends are like, how the hell do you do that? To me, my brain shuts down at that point, right?
I'm sure you've talked to people. They're like, I can't believe, Andrew, how you're doing all this stuff. Is it a time management thing that makes you successful? Is it what, or something else? Or maybe in addition to, like, why are maybe you successful with this, and then some people think they can't be successful? Of course they can be, but they don't think right now that they can't do it.
So I'll be honest, I've been refining this whole thing for the last year and a half since I've gotten serious about it, right? But yeah, time management is one thing. I think second is I use another process called time budgeting, right? Where I take, okay, the 15 hours, how do I want to spend my time? And I'm always auditing myself. And honestly, I catch myself, oh God, why did I spend so much time in A or B? So maybe I'll say I'll spend 5 hours as my cap for finding deals and 2 or 3 hours on education and 2 or 3 hours in finding investors. So I've got a budget of where I align with my goals for the year of like, how do I want to break that down? And if I'm spending 10 hours finding deals, I'm supposed to be the capital guy. Like maybe I should rethink how I'm spending my time, what activities I'm doing, right?
How do you budget it? Do you write it down? Is it in your brain? Is it in your calendar?
I do. I write it down. So I started out, like, for example, 2022, I've been refining this process because I kind of just was shooting darts at the wall for, the first 6 months of 2021. I'm like, oh my God, I feel stressed out. And don't get me wrong. I'm probably oversimplifying this and it's not easy, but you just have to have discipline. So you start out with a goal of like, let's say I've got 15 hours to use and you catch yourself spending 25 hours, you feel exhausted. Okay, pause. Am I spending time on the right activities? That's where I like to audit myself maybe monthly and go back and say, oh my God, I just spent 3 hours writing a newsletter. Maybe I should get a VA to do that part of things, right? Because it's not a perfect process and there's no magic bullet, but I think it's just staying with it and being willing to adjust and adapt as you see yourself slipping off the track, or have somebody else call you out and do that,
My wife sometimes reminds me that I probably need to come home every once in a while and be present with the family. How does your wife react to the 2 jobs that you're working right now?
It's a balancing act, and she's the first. I'm thankful to have that partnership. She'll call me out, right? If it's 8 o'clock at night and I'm outside of my, hey, this is my 7 to 9 p.m. is my time window of my family. I'm supposed to be hanging out, having dinner and playing Monopoly or playing, Operation, whatever. She'll call me out and be like, dude, this is not what we agreed. And often she has to reel me back to reality and say, hey, we agreed, like, this is the sacred window. You're outside of that window. So, yeah. and you find blocks of downtime here and there, right? Like I travel sometimes for work. I've got 3 hours at the airport. I can utilize that time. So it's not a hard and fast. It always has to be those blocks, but 90% of the time I try to adhere to that concept. Yeah.
So communicating with your wife or your spouse is super important, getting on the same page, right? And so I think that's important because sometimes expectations can be different. She's thinking one thing, you're thinking another, but once you agree on something, then you can hold each other accountable. So I like that. What kind of habits or disciplines do you have that help you?
So the one thing that I would tell even my friends that aren't in real estate who are looking just to better their lives is I start every day with kind of a certain process that I've refined over the last year. And again, for everybody, it's going to be different. I happen to be energized by learning new things, right? So I spend every day, 7 days a week, really for the past 6 months since I started this, by reading 20 pages in a new book or listening to a podcast. So that for me, that gets kind of the juices flowing. It actually helps me in my W-2. It helps me in my family life because I learned some, personal things there, and it helps the investing business. So for me, that a little bit of caffeine, a nice meal, maybe a little meditation or a 15-minute workout, that gets the juices flowing. And I feel like if it wasn't for that, and I've tried it, when I slip off track, things don't go as planned.
So that's the next thing I was going to get to actually. So when we all have a plan, and sometimes things fall off track. How do you get back to that? When does it fall off? And then how do you get back to it? Which we all kind of deal with that, right?
Especially holidays. And then you go on vacation, and there's so many reasons.
Traveling.
Yeah. So many reasons to not stick to the plan.
Yeah, there's a lot. I'm a big fitness guru, and I have, buddies we work out with, 3-4 times a week, or I'll do the Peloton in the morning. There's a lot of parallels between, your fitness and physical discipline with your mental and your learning discipline, your business building, whatever it winds up being. So I guess the biggest thing is if you're not the type of person that can hold yourself accountable and recognize when you're slipping, find somebody else who will call you out on it, right? So accountability groups are really great, either for, physical health, mental health, whatever it may be, spiritual, whatever it may be. If you're not the type of person, you'll probably know if you are, you're not, that will recognize that coming to vacation, you're not self-motivated. Put yourself in a group that'll call you out on it, right? I mean, that's one way that I've learned that's helpful.
What are those groups exactly? Like what kind of accountability groups are you talking about?
So, I mean, in my case, I'm part of a mastermind program, actually a couple of different programs. And one of them we meet twice a week. We'll start the week with kind of a Microsoft Teams group. We'll send out a post. Hey, what's everybody have going on? And then I'll usually follow up on Friday with, did you hit what you wanted to do? And if so, great. If not, why not? And what are you going to change for next week? So one example, and then on the physical side of things, usually Tuesday, Thursday nights, we'll meet with a group of, we work out together for, half an hour, 45 minutes. And we'll kind of track on the whiteboard, what milestones do you want to hit? Is it, running a marathon? Is it, a certain bench press, deadlift, or squat personal record, right? So keeping it visible, keeping the goals visible, and then tracking everybody and holding them accountable against it. So
this is pretty interesting. Where do you find groups like this? Did you just make them, or where'd you seek them out?
No, I guess they're organized through. We found the initial contact through on the business side of things. Initial contact through business, Bigger Pockets. Sorry. And then reached out to an individual. We started kind of socializing about other names might be interested in the same type of concept. And then we kind of built the group from scratch, maybe this time last year or a little bit later.
So one thing I got to ask you, Andrew, is that you're still working, right? You're still working your job. What's the plan there?
God.
Yeah. What's your plan there for
the magic question? Magic question. So, I'm one of the few that probably I really enjoy what I do in the W-2. And at the same time, I realize that you're a little bit vulnerable in this type of position, right? So you can't control your ultimate destiny. You don't have control of what happens to you in, let's say, 2, 3, 4 years on the line. So for me, I'm kind of building that base. I know my business is something I want to build rapidly for the future. And kind of my source of energy for that is I want independence, right? So the plan longer term is to have control over my future. Whereas, again, things are going really well at the W-2 now. You can't control what happens in a year or two with the market, with the company, with the financials, with leadership changes. Inevitably, I've been through cycles and cycles of change. You can't count on that forever, right? So that's kind of my source of motivation is plant the seeds now, go hard, knowing you've got something to fall back on for now, but it may not last, right? That's the vulnerability we're all up against.
Yeah. What does financial freedom mean to you?
So maybe for me, it's the classic definition is, we've got a certain lifestyle that we like. It's nothing glamorous right now. Being able to cover those expenses with a passive source of income, or I'll say something close to a passive source of income where I'm still involved, but not maybe 40, 50 hours a week. Ultimately, it'd be great to spend, instead of spending 50 hours, let's say 60 hours a week between my W-2 and I'll call it my business right now, to spend maybe 20 hours a week on the business and then 40 hours of family, right? A quality time. That'd be the ultimate goal for me.
So you see yourself spending more time with your family. What would you do with your family for 40 hours, Andrew?
Oh, but thankfully my kids are in school right now, but honestly, not just the family stuff, but pursuing passions, right? It could be spending more time fishing or, spending more time in physical fitness and taking trips and traveling and pursuing, I like to do woodworking and barbecuing, more time doing that instead of an hour a week, it could be 5 hours a week. So it's not all 40 with family, to your point. I think we kill each other maybe at that point.
I think there's a temptation as entrepreneurs, it doesn't mean what you are, that, the more you work, the more you can do. And therefore the less you work, the less you can do. And I think there's a big temptation, and we got to be careful of that. The main difference is though, is that you're doing it for yourself, right? There's no one telling you what to do and how to do it, right? It's up to you, and therefore you can't control it. Though the temptation is always there, and I think it's very important to again sit down with your wife and your spouse and go, hey, what does financial freedom really look like? I don't know. Have you done that? Have you talked that through? Because look, I'm looking at your track record right now. It's an inevitability that you make enough money to cover your living expenses, and then you have to make a decision. Well, do I still want 2 jobs, or am I going to quit one of them? And what does that look like? Have you talked to your wife about that?
Yeah, I guess we didn't use those exact terms, but I think when I started this business, we talked through what it would look like and what the objectives would be. And I'm like, and every time, every time she'd catch me off guard of hey, it's 7:30 and you're interrupting family time, or you've got a mastermind call, or you're going to a seminar, or whatever it may be, I usually remind her of hey, this is the reason we're doing this. And it's not an Andrew thing. It's a Schutsky family activity. And this is, something, again, that I can teach the kids and something that'll benefit the whole family from. So it's kind of a connection between every time I'm investing time, it's not just a fun activity. There's a reason for it.
Right. Well, you're sacrificing right now, and she understands that. But what I'm saying is, once you get to that point, and I catch myself, I'm in a point where theoretically I wouldn't have to, do what I'm doing right now. I'm just very driven, and I'm a bit of a mission right now. And so my wife does remind me, hey, remember you did this because you control your time now, right? You're the boss. You can do whatever you want. I'm like, well, yes, but I have this thing, And I think it's important to sit down. What does it actually mean? What does financial freedom really mean? Because you will figure out, you're a smart guy. You'll figure out a way to fill your 60 hours a week that probably doesn't involve your family. So sitting down and talking to your wife about, hey, what does that ultimate goal really look like? Here's what we're working towards. Yeah. And this we're sacrificing in the short term to get to that point.
Yeah, I mean, I'm sure I have additional work to do there as well, right? And honestly, goals can change over time, right? So,
absolutely.
The initial concept, again, okay, we're freeing up time to do this. A year from now, okay, your aspirations may be higher, right? So I think it's having that open dialogue. There's no perfect process, but having a goal in mind to start with is fantastic, and alignment there. But I'm always open to, hey, this can evolve, right? It can escalate. And you got to be careful of the maintaining the balance of the family and your aspirations.
When do you think you could consider quitting your job? Not that you want to do that, but how close are you?
I think the goal is to be able to have the option to exit in 2 years.
Yeah. And you're about a year into it then, at least.
I'd say 2 years from now. So it was a total of 3 from when I started, but things are moving quickly. So you never know. You can't control your outcome. And all you can do is go hard, right? So
yeah, that's exactly right. Well, you said you want to do 2,000 units this year?
Over the next 2.
Okay, well, that's nice. That's nice.
Yeah.
It always amazes me also, Garrett, how quickly we have ramped up as well. In the beginning, especially when you're first trying to do your first deal, it kind of takes a long time. And then your second and a third kind of come. And then you kind of find your stride. And you find your partners, you got your team together, and then at that point, things it's like a hockey stick, really. Right?
If that truly is your goal, by the way, 2,000 units, the job is going to be far in the past. I have a friend, at least. So this is actually kind of funny, but he was ramping up his multifamily, kind of in a similar place actually, and he's like, he had 3 or 4 deals, and I think the splits were kind of unfavorable in the way they had it set up, and he wasn't making a lot of money. So he got this job for $200K a year. He's like, this makes a lot of sense. And then they doubled in size, and he's like, I'm like, how do you still do that? And he's like, oh no, I don't. It's like, that's over completely.
And to me, it's more than just about the number of units is kind of just the target, right? But it also depends on what's your role in those units and what's your ownership percentage. Right. And then there's a certain bar you got to clear, right? So if all you're doing is I'm doing the tech side and raising capital, it's a different story than your asset management.
You have to own it.
Correct.
You can't just be like an LP on the small level, and all of a sudden you're done.
This is a common path, Andrew. I see all the time, and it may start with passive investing, but like I said, it starts with a deal finding and/or with a capital raising, like you talked about, and people specialize in that a little bit. But then after a while, they're like, I need to own more of this deal, right? And then the deal finder starts to raise capital, or partnering with somebody to raise capital, and they have a partnership. Yeah. And then the capital raiser starts, instead of partnering with a bunch of deal finders all the time, they're like, you know what? Yeah. I want to partner with a deal finder, and we are going to be the operator. And this is a natural progression of where you're going. When that happens, you get more and more of the equity. Yeah. But I want to wrap things up here, and what are your top advice, suggestions for people who want to get started and on the path that you're on right now, and busy professional, and it's tough to extract yourself when you have a high income, you have a lot of responsibility. It's a high hurdle, both in time and money to kind of get that done. What's your advice to people who want to kind of get started, and not just get started, but build momentum to get to where are you right now?
Yeah, I've got a couple I actually thought through ahead. So I want to share this with you guys. So one, and first and foremost, this is more of a mindset than anything. And for those, especially that live in the world of, a high level W-2 position, the family thing, I got a quote that I like. It's find the fun in the chaos, right? Because if you don't learn to enjoy things being hectic, it's hard to sustain that, right? If you're just going to be constantly pressured and you're always worried about chasing one thing or another, find the enjoyment in it. Otherwise, you're not going to survive. First and foremost. Another piece, we talked a lot about time management, and I'll say be ruthless with your own time and respectful of others, right? So again, don't be afraid to audit yourself or have others call you out on it. If you're spending 15 hours a week on non-value add activities, it's not going to last, right? And you're not going to have an additional 40 hours poof out of nowhere and then expect to make productive use of that time. So be ruthless. And I say that like bold capital underline letters with how you invest your time, who you're talking with, how you invest your time generally. And I guess the last piece that comes to mind is be yourself and focus on your strengths. You don't have to build every weakness up And that's kind of the mistake I was trying to make, is I was trying to do everything and please everybody in the beginning, and really focus on the one or two things early. I spent, like I said, 6, 7, 8 months trying to find deals off market, on market, partner with people, go to conferences, obviously with the W-2 in the background. It's not sustainable. It's just going to burn yourself out.
Right. So really ask yourself, what are you really good at and what do you love to do? And you decided that you were good at what?
Yeah. So I'm still narrowing it down. I love finding deals, and I love the investor relations side of things. And I'm probably going to hone in on one of those two in the next few months here, because I'm going to be more successful doing one of those than two.
Andrew, how can people reach you if they want to get a hold of you?
Great question. So my investment firm's name is Redline Equity. So you can email me directly at Andrew@investwithredline or www.investwithredline.com. You can check out our podcast, The Crushing Cash Flow. We're on all the major platforms, iTunes, Spotify, all that stuff. That's probably the main source of contacts, but also Facebook, LinkedIn under Andrew Schutsky.
Andrew, man, you have been absolutely incredible. So many great lessons here. Thank you so much for your time. And we look forward to connecting in the future.
Really appreciate the opportunity, guys. It's a pleasure and an honor to connect with everybody.